Good morning, and welcome to IFPA's 2020 Industry Insights. My name is Bob Munn, and with the support of the IFPA Board of Directors, I've been your host for 4 years of these Industry Insights, the community publishing industry's premier webcast training series. Before we get down to work today, let's talk a little bit about some fun and profit. We're coming upon time for IFPA's 8th Annual Publisher Summit. Each year in February, a sellout crowd of publishers gathers in some sunny spot to share ideas and set plans for the new year. This year, the summit expands by 50%. More sessions, more presenters, more great ideas to bring home and turn into money. On February 27th and 28th of 2015, the summit convenes at the Bahia Mar Resort in Fort Lauderdale, Florida. If you've ever been to Fort Lauderdale, or if you've ever seen a movie about spring break, this hotel is just a golf shot away from A1A and beautiful Fort Lauderdale Beach. That's some sand no golfer would mind ending up in. You can book extra beach days at the hotel, and I recommend it. But on Friday and Saturday, you're going to be building your community publishing future. In a first ever Friday afternoon session, Joe Mathis will share some of the insights that have kept his publications in the forefront of both the digital and traditional print aspects of our industry. I understand Joe's also going to show us some of his latest initiative in digital newsletters that he's using to further refine his approach to his audiences. Later on Friday, today's guest, Paul Huntley, will expand on some of the topics he'll be discussing today with a special focus on Apple Pay and what that might mean to us. And as you'll see today, Paul's message resonates with both the sales force and the business side. He's here to make sure everybody gets their money. On Saturday, Rob Haig returns to expand on his presentation from last year. Best known as the developer of the automotive juggernaut AutoConnects, Rob's community publications continue to innovate on both print and digital sides. I understand he also has some new success stories that we can learn from, a lot to be learned from a guy like Rob Haig. But the heart of the Publisher Summit continues to be the unprecedented peer sharing and problem solving in the roundtable format. Moderator Doug Fabian isn't going to let anyone rest until every topic you came to explore is investigated in depth. It's the best 2 days in community publishing, and all you have to do is register at freepaperconference.com. Do it quickly. This sells out every year and spaces are limited. That's freepaperconference.com, available at an internet near you. My guest this morning is Paul Huntley from MSG Payment Systems. The promotional for this session identified Paul as our industry's expert in the complex world of electronic payments, and that pretty much sums it up. He's been an industry fixture for as long as I can remember, and I'm proud that he's joining us today. Paul, welcome.
Hey, thanks very much, Bob. First of all, I want to thank IFPA and Bob for having me on today. Like Bob said, I think we've been a member of IFPA for, I think, the last 14 years, and we've been providing fast, secure, reliable payment systems in that time. And with IFPA's membership and other memberships across the country, we've really established a footprint in the newspaper industry. I am going to go back to my original slide here in the beginning. We are going to be talking about minimizing risk today. Minimizing risk that associates with accepting credit cards, which happens to do with fraud and chargebacks. So,
okay, I can vouch for this. I've seen this presentation, and I want to warn some of you up front. It's kind of scary at the beginning, but Paul has the answers that are going to make the good guy win in the end, and I think that's right. What's important. Let's okay. We're gonna move this. We're gonna move all the way across the country to Paul's screen. Okay. Citrix is catching up with you now. There we are. Okay, you're driving, buddy. You're on.
Okay, excellent. Sorry, I thought we were on my screen originally. So here we are. again, celebrating 14 years as an IFPA member. And I really want to start, we're talking about minimizing risk today, and I really like to start like, why are we discussing this? Why is this important? And I just want to go through a few statistics here to get your attention. Right off the gate, credit card transactions are expected to increase 33% of all payments accepted. What that really means, in different industries, payment systems is a percent of total sales. For restaurants and entertainment industry, it's into the 80 to 90%. So this is an entire structure of the industry. You may be higher than 33%, you may be a little lower, but what really we're wanting to talk about is if 33% of your business is credit card transactions, you really need to know the risk associated with accepting those payments. So it's impacting businesses more and more. 10, 15 years ago, you may have only taken 2 to 5% of your total sales in credit card processing or credit card transactions. Now it could be 50% of your business. So if you don't know the risks accepting Visa, MasterCard, Discover, American Express, you need to. You hear about the Lowe's and the Target breaches. Those are in the media every day. But that's really a small percentage of breaches. Small merchants have the highest fraud rate than larger companies. Debit and credit card abuse is one of the most frequent sources of fraud. Small merchants account for more than 85% of all data compromises. And again, a data breach, big or small, has a huge impact on the company's bottom line. When you look at a Target or a Home Depot or a Lowe's or a big internet company that takes a compromise, they really have the insurance policies and the money to pay for all that. When we see a small merchant that gets a compromise, the liability that is associated with the compromise, just from the standpoint of the actual transaction, but the fees, the attorney fees, legal fees, and even the fees that come down from Visa, MasterCard, as in penalties, can put a business, could put you out of business. And at the end of the day, there's really no 100% security. So what we're doing today is giving you some tools, tips, how you should function in your business in today's environment to minimize your risk. So today we're going to be talking, these are the topics of discussion. I'll go through all of these. The last one we're going to talk about are solutions. Keep in mind, this is all of these topics here could be its own webinar. So after the call today, if you have, we'll take some questions obviously during the webinar and after. But if you have personal situations or questions or something that you want to go in more in depth on any of these topics, we can sure set up another call or another webinar for your company specifically. And then secondly, on the last solution, Bob mentioned this earlier, we're going to be expanding on the solutions in the summit in Fort Lauderdale. We'll talk about actual products and solutions that are out there in the market today. You may have heard of Square. Apple Pay is a big one that's just hit the market. So we're going to talk about those solutions specifically. Are they good for you? What are they? And what are their niches? So let's get right into it. Manage fraudulent
Paul,
transactions.
if I could interrupt for just a second, it seems like a
Yes.
good point to remind folks, if you have a question, don't be shy about typing it into that dashboard up in the right-hand corner of your screen. I already have a couple in there, and if you have a question that doesn't get answered, it's going to be because you were too shy to ask it. So Paul's here. He'll take care of any of your, well, he'll address any of your questions or concerns. But please don't be shy about submitting your questions. I'm sorry, Paul, go ahead. I'll get out of your way.
No, you're good. You're good. So what we want to do is really go through a transaction and what's the risk associated with a transaction. Anytime you can swipe a card, you're going to lower your risk of a transaction. You want to obtain a cardholder signature. And in the newspaper environment, that's hard to do. Sometimes you're doing classifieds online. You're doing things over the phone, you have reps out in the field, you bring credit cards back and you're keying them in. So if there's a situation where you could obtain a swipe of a card through a mobile payment for out-of-office transactions, that is a solution. We'll talk about that more later. And obviously, if a swipe is not available, which is very prevalent in your industry, you would like to get a signature, transaction date, transaction amount, and authorization code, and an imprint of the card. Now, that seems antiquated and outdated, but we still have people that imprint the card to show that the card was present when the transaction was done. This page really is more conducive to how you guys do business in the paper industry. Anytime that you're using a transaction or running a transaction, we call them card not present. You want to include the CV2 data, which is the code on the back of a Visa, MasterCard, or the front of American Express, and the AVS system. Most processors today offer an AVS system, which is verifying the cardholder's billing address. A lot of times it's just the zip code. You want to get a match. And then we talked about the security code on the back of the cards already. If you're delivering any type of product, you have a business avenue or a business structure where you're sending out product, if you will, you really want to make sure you're delivering that to the cardholder billing address. We see a ton of fraud going even through my office that people want to buy product but have it shipped somewhere else. So we see that quite a bit in our industry. So just make sure that it is being delivered to the address that the cardholder listed, and then require a delivery, a signature at delivery. So we'll go into implement a fraud protection program to help detect and prevent fraud. Many internet payment gateways offer these tools to help minimize risk associated with card not present transactions. Just examples, you can block such things as certain IP addresses. If you know fraud is coming in from a certain country or a certain area, you can actually block certain IP addresses or billing addresses, or actually card numbers. You know this, a certain client has given you problems in the past. You can block a certain card. So there's tools out there that you can implement a program inside your location. And then some just really simple. You do a reverse lookup on online directories. Who's calling me and ordering this? Is it a legitimate business? Is it a legitimate person out in the industry? Don't skip steps. I think one of the things that we find all the time is even owners of businesses may know these rules. Staff does not. They get excited to make a big sale, or, oh, I'm going to make a $1,000 sale here. It's exciting. I didn't do address verification. Really didn't look into who I'm selling to, and pop, it's a fraudulent transaction. So, and I always tell people, listen, if it's too good to be true, you know, we have people that sell stuff all over the country, and they get all excited about making a sale, and they ship it out, and then find out a month later that it's fraudulent, and they've lost their product and their transactions. So, you know, use some common sense out there. One of the things that happens, and most of you have experienced what is called a chargeback, and it's really a dispute, if you will. It is a system, if you will, or a procedure that can be very painful and drawn out, if you will. But typically, it's a transaction that's disputed by the cardholder. The cardholder contacts their bank that issued the card and disputes the transaction. It can be for a lot of different reasons. They cannot be avoided completely, but you can minimize your risk there by regular monitoring your processing. The most common chargebacks are basically, at the end of the day, cardholder disputes. The cardholder does not like what they, you know, bought, or they want to return it. And then fraud. Someone has a stolen card. The cardholder calls and said that wasn't me, so it gets charged back to the merchant. And little things in the location. If you're processing, the incorrect amount is charged. You may charge, it's supposed to be a $10 transaction, and you charged $100. You're hoping that the client calls you and corrects it, but they really have the right to call their cardholder and say, you know, this isn't right, and that can come back to you as a liability. And then really it's the product not delivering as expected. So if it's an ad or a classified that's not right, really want them to call you so you can make it right, and give them a credit or run something different or refund the product. But they don't have to. They can call their Visa issuing company and say, this was not delivered as I wanted it. I want to dispute it. And typically you will lose in those transactions. So, to
Paul,
minimize
you're
that,
painting a really rosy picture there so far.
yeah,
I assume there's a bright side at the end of this.
yeah, there will be. Promise. Yeah, and I don't want to really scare anybody, but the reason we talk about it, and Bob brings up a good point, and a lot of people, you may not even experience a chargeback, but there's rules and regs that are out there that you need to know about. And so there's little red flags, and if you just do little things that you may never have one. So, and here's what we want to talk about is to minimize these chargebacks and disputes, is be very clear on what you're selling. So provide a clear disclosure of your business policies. You're responsible for establishing your return policy, your credit policies. Clear disclosures of these can help avoid misunderstandings with your clients. For example, if you're selling retail, your refund policy on a receipt or near the signature line. If you're keying cards in an environment, require your refund and credit policy on the document that's signed by the cardholder. Whether it's the days or they have so many days to return something. Whatever your policy is, you need to have it verbalized to them or written. Internet transactions, implement a click to accept or an affirmation button to acknowledge the policies of your company online. So display the terms and conditions of the purchases on a screen during the checkout process. And so all of these, when you get a dispute, Visa and MasterCard and the issuing bank come back to you and want all this information. What did you disclose to the merchant or to the client? Oh, nothing. You'll lose those transactions. So on everything that you do, include your DBA name, your phone number. Give the client access to call you first if there's a dispute. We see a lot of internet companies, you purchase and the DBA name is different than the corp name that you're on the internet. Those things all matter. So when I get my Visa, or the consumer gets their Visa bill and sees, $500 charge and it's a different name than they recognize, that can just start a big problem. So, and something really small, settle your transactions within 24 hours. Anytime you've authorized somebody's money and then don't settle it, and if you're processing Visa, MasterCard today, that's called batching out or settling at the end of the day. We do run into merchants that settle once a week, or they just, they want to send their batch on Friday at 5 every day. Well, they've ran transactions all week long, and so the dates are messed up. So the client's in there thinking they bought it on Monday, but it didn't show up until 7 days later on their Visa statement. By rule, they can dispute that transaction and probably win. So because you didn't sell your money in time.
This was the one that surprised me the most when we were going over it before. What's the world record in your experience for people waiting to settle their accounts?
Oh, I back in the day, we've had people settle it like, once a month.
Why don't they want their money?
They don't get it. And so the other risk on this is you pay higher fees when you don't settle your money. So when you run transactions, you authorize somebody's money today, you don't settle that money within 24 hours, Visa, MasterCard will penalize you in fees on your merchant statement. So not only are you putting the whole transaction at risk, you're paying a big premium for it as well. So that is one thing we do when we analyze somebody's statement, is we look for red flags like that. There's certain categories on statements that would indicate to us that you're not closing your transactions out every day. So that could be, a terminal, it could be something internal that is not being done, it could be a software issue. So we take a look at that as well and monitor that on our merchants. This is the big, what I'm going to talk about next is pretty important in the newspaper industry. Cardholders have 180 days from the final delivery date to dispute a transaction. Because of this, we recommend that you establish a recurring payment schedule for repeat ads, subscriptions, or any other contract commitment that runs for more than 30 days. Process payments individually instead of all at once. For example, if a customer buys a 12-month subscription, charge them once a month for the next 12 months as opposed to charging them once for a product that will be gradually delivered over 12 months. We call that pay forward. This will decrease your risk from 12 months plus 180 days to 1 month plus 180 days. So if this doesn't make sense, send me a question, or we can talk about it later as well. But we talk about the newspaper industry, and it's kind of battles the old philosophy of getting your money today, okay, which I always believe in. I'm a finance major. Get $1 today is worth more than $1 tomorrow because of the time value of money, interest. You can earn interest on that money. So you always talk about get your money in your bank. That's great, except when you talk about accepting on Visa and MasterCard because of the rules. So when you accept a $1,000 payment for an advertisement that is going to run over the next 6 months, that transaction is not only liable for that 6 months, but it's also another 180 days after the last date of the commitment. So you're just putting you're extending your risk on those transactions by doing that. So
to put that in terms that maybe more of us can relate to, Paul, and let me know if I'm off base on this. For example, coming into the end of the year right now, I don't know if any of you have this situation. I used to have a few people who would come to me and say, "Hey, I got to get some money off the books. Can I prepay next year?" Great. We want the money up front. So then they give us the Visa card and say, "Charge me for next year this year." And you do that. But what happens to your liability there then, Paul?
Well, yeah. I mean, it's very clear. If that's supposed to be in your case, is that a 12-month commitment?
Mm-hmm.
Is it whatever commitment that is? Yeah, that is extending your liability out to 1 year and 180 days. So because that commitment's out an entire year. So and that's great. You get your money, and there again, going back to what I said, there may not be a problem here. You know that client.
Yeah.
They've been a great customer. Probably nothing's going to happen. But what we're talking about today is the underlying risk of those transactions. What are the rules of Visa and MasterCard?
Yeah.
What if that guy all of a sudden has a problem and he goes out of business, or he has a bad couple months? God, I really would like that money back. I got to use it for payroll. Let me call my issuing bank. Hey, I need my say it was $1,000. I need my $500 back. I'm not going to pay the last 6 months of this commitment. That whole transaction is liable, $1,000. So
now the good news is
you're
you're part of his tax avoidance scheme, so he's probably not going to cross you.
Right.
You probably know the guy, but that's in the letter of the law. That's the deal.
Yeah, and we've had some newspapers have a 3-year subscription. Why would you ever do a 3-year subscription? And you get all that money up front. If someone could charge that back up to 3 years plus 180 days on that. And then data security. This information is really another webinar, and it goes into PCI compliance. But these, I'm not going to go through all of these in depth. It's just a list of things that you can do at your location. Comply with all PCI standards. If you're not familiar with PCI standards, our processors that we use, and every processor has a PCI program that typically it's a long form that you have to fill out how you process, what technology are you using, are you storing cardholder data, all that information. So you want to be PCI compliant. If you're not, you need to call your processor today and say, how do I get PCI compliant? And then just common sense stuff. If you're going to do e-commerce transactions, make sure you're using an SSL. The consumer out there is not going to purchase your product on an unsecure website. So always store your credit card numbers with secure third-party providers. Always change your passwords on your computers or your software that you're accepting payments on, and restrict employee access to data. You know, a lot of the theft and fraud comes from employees running credits on their own card or stealing card numbers, you know, from the location and using them in personal use after they've been let go or there's some type of grudge in the office. Make sure you install a firewall. Always install and update your antivirus and minimize file sharing and avoid idle internet connection, especially if you're using like a virtual terminal or you have software that's connected to the internet all the time. Make sure that that's not just sitting out there in an open line so hackers can get into your location. I want to talk about this real quick. It's the EMV technology. It's named for its developers. It's Europay, MasterCard, and Visa. It is developed to reduce card present fraud. Okay, a lot of you guys don't use card present, but the reason I want to talk about it is because as the card present technology gets better and the security gets better, we're anticipating the card not present environment to experience more fraud. So I just wanted to bring it up to you. If you do any type of retail, you have credit card terminals, you have people that come in your office and you swipe their card, you're going to want EMV technology. It's basically a credit card that has a chip embedded that will basically replace the magnetic stripe. So, and the deadline for the liability shift is October 1, 2015. So if you have card present transactions and you are not, you do not have EMV technology at your location, you will be liable for all those transactions if they're fraudulent. So it's kind of a big deal in our industry. There again, all this information that we talked about today isn't, you know, there to scare you. It is a little. You need to know the liability that you're taking on your payment systems, especially going back to if it's, you know, 10 or 15% of your total sales or 80% of your total sales. So we always like to present the issues and the problems, but then we turn around and talk about the solutions. What can you do? What products out there are there to help minimize risk? And one of the things you can do is a software integration. You can integrate your payment systems right through your software. There again, there's other issues there. You want to make sure your software is PCI compliant. You're using PCI compliant third-party connectivities, whether they're gateways or what your connectivity is connecting to the processor. Virtual terminal is probably one of the best solutions out there. A virtual terminal is basically a URL you can go to, log in, many of you guys use them, and run your transactions right at your desktop.
Paul?
Recurring.
I'm sorry, go ahead and finish your thought.
Okay. You can do recurring payments. You can do a customer information manager, or what is called a vault, which you know, will store customer data for you. You can have multiple staff processing credit cards at the same time. You can do ACH payments. So there's a lot of functionality there that you can use on a virtual terminal. Bob, did you have something?
Yeah, fortuitously enough, we had a question pop up here. This might be the place to address it. Is it better to set up recurring payments on a credit card or ACH?
That's a good question. As far as risk, you know, the topic of today, an ACH transaction has less risk, and it costs less. Typically, it costs less, depending on the size of transaction. The problem with ACH, and just so everyone knows, ACH is basically an e-check. You're taking the payment right out of somebody's checking account. It's less risk because the rules and regs are different. You're running through the Federal Reserve System instead of the Visa and MasterCard system. Typically, you're going to want a signature on those transactions that the client knows that it's coming out of their checking account. But that's really driven by your consumer or your customer, your business account or your consumer. What are they comfortable with? So a lot of times it's driven by your client. You know, if you can get them to set up a contract. Maybe it's a business, and an ACH. I would recommend an ACH at that point as far as cost wise. Now, most people want a credit card because they're getting points and they get one big bill at the end of the month. It's not taken out of their checking account. So I hope that answered it. Most people have a combination of both ACH and credit cards.
Got it.
So.
If that doesn't answer your question fully, don't be shy about following up.
Right. And then you can also do what is e-commerce or web integration. A lot of times we can take these tools like recurring payments or a customer information manager, and you can extend those tools out to your website so the consumer can actually make a payment on your website. And so that can eliminate a lot of things. It can eliminate staff work. If you're sending out invoices and you want people to pay, excuse me, you can direct them to your website and make a payment. So now they're not calling in and taking staff time to run payments. It's really way things are going. A lot of businesses want their clients to do the work, if you will. And then we talk about mobile payments. Is there a solution out there that will help you minimize risk out in the field? Do you have reps all over the field taking credit cards? Could you upsell something if you took a credit card right at the location? So you can add that to the iOS technology, Apple or Android. So you can have an iPad right out in the field and take a transaction. So most of you have heard of Square. That's a mobile technology, and we could probably get into Square today, but that's more of a specific product and what it is and how do you define it. And I don't think we have time today, but we can sure talk about. And that's what we're going to do in Florida, is talk more about specific products. There's a million of them out there. So, and then obviously countertop terminals. Bob, did you have something here?
No, the only thing that I was thinking when you were talking about Square was, if you'll remember, when you and I started talking about this session back in Chicago, that's what prompted the whole thing, and our
Right.
approach to using those in the close to get money with copy.
Yep.
But that's gonna make that session in Fort Lauderdale very, very valuable.
Yeah, absolutely. And then we've talked a little bit about countertop terminals. In some locations, you have a good percentage of your transactions that are card present. You're going to want to swipe and get the EMV technology. So, and then again, we're going to talk about, in Florida, we're going to talk about multi-channel processing. So we have merchants that do all of these. And so I think sometimes merchants get into the mindset like, well, this is how I accept cards. This is the only way I want to accept cards. I have a terminal, or I have a mobile payment, but there are so many solutions. You could really accept payments in multi-channels or multi-products. So keep that in mind. Really, that's about it. Anything that we've discussed today, whether it's risk or rates or anything that we can talk to you about, we can illustrate you on a merchant analysis, what you're doing now, your technology. You can go to our website and ask for a free analysis of your merchant account. So that's really about all I have. Here's my information, where we are, and contact information.
Okay, now we don't really have a surplus of questions, and actually I was thinking about this as we were going on through there, and I think the questions in this area would be very difficult to keyboard. They would be intimidating to try to keyboard into something like this. It's probably something that you want to do face to face or on a phone call. And Paul, you're available anytime, right? You or Courtney are ready to talk to these folks at any time at these contact numbers, right?
Yeah, and that's a good point, because typically when we talk about risk and chargebacks and fraud, typically the questions stem from a personal situation that you've had. I've had a card that, or I had a customer do this or do that. I lost. How do I do that? But yeah, absolutely. Sometimes they're very complicated questions, so we're available.
So they're the contact numbers up front there. Don't hesitate to be in contact with Paul or Courtney at MSG. Paul, you've given us a lot to think about today, and I want to thank you for your generosity. Those of you who have further questions, they're there to answer them, or you can see them in Fort Lauderdale. And I can't speak to the presenters in Fort Lauderdale, but my philosophy has always been, if you've got a question in an open bar tab, I'm your guy. So a lot of ideas going to be exchanged in Fort Lauderdale. But in the meantime, this is Bob Munn speaking for Paul Huntley and the entire IFPA Board of Directors, saying the future doesn't begin tomorrow. It's starting right now, this instant, with what you plan to do with what you saw today. There's still plenty of time today to help your customers make some money, and you are just the folks to do it. Have a great day, everyone. Thanks for stopping in.